I'm the animal at the head of the pack.
You try.
Okay?
Yeah.
I generally am. Yeah. And like I said, I either get eaten or I get the good grass.
David Tepper owns 36 stocks in his portfolio worth $6.7 billion. In this video, we're covering his 10 biggest positions, starting with number 10, Baidu. David Tepper's position in Baidu currently is worth $199 million. It makes up 2.84% of his portfolio. He's bought the company in 3 different quarters and he's sold on 4 occasions. With his most recent average buy price of $119, he's down around 7% from when he was buying in the second quarter of 2023. Baidu's a $32 billion Chinese tech giant that trades $16 above its 52-week low. The company's been called the Google of China, and it owns 84% of their search engine market share. The company looks very strong on its abilities to produce cash flow and where it trades compared to its gram number. This is why today a Guru Focus value for the company comes in at $138 per share. That's $30 above their current stock price, saying the company might be undervalued by as much as 21%. Baidu's owned by 5 super investors, 4 of them added in the most recent quarter. This included buys by Michael Burry and Howard Marks, along with a big ad from David Tepper. It's been a while since analysts were bullish on China, but right now they have a price target of $143 per share, implying around a 30% upside. David Tepper is a billionaire hedge fund manager. He's the owner of the Carolina Panthers NFL team and is the founder of one of the world's most successful global hedge funds, Appaloosa Management.
Tepper started the firm 26 years ago and is said to have generated 25% annualized returns on average since then.
Tepper specializes in distressed debt, public equities, and fixed income markets around the world. Although most of his investments aren't disclosed in his 13F filings, his stock portfolio has produced excellent returns. Tepper is opportunistic in his stock investing and often takes a contrarian view, which we'll continue to see here as we look at his remaining positions.
If historically I can look behind me and I see, well, there's other animals following me. They don't necessarily follow me that fast. Sometimes there's no other animals around when we do things.
Recently, Tepper's hedge fund significantly reduced its stakes in several Magnificent 7 stocks and instead bought into Chinese equities as they hit a multi-year low. Even with this rebalancing, we'll see he still has heavy tech investments both in the US and in China. At number 9, we have Advanced Micro Devices, better known as AMD. This makes up 3.82% of Tepper's portfolio, and he has a holding worth $268 million. Tepper first started buying AMD in the second quarter of 2023 as well. Since then, he's netted a gain of around 58%, and he's been trimming his shares in the company for the last 3 quarters. In the latest quarter, Tepper sold 18.9% of his AMD shares, netting him a gain of around $70 per share. Today, AMD is a $263 billion business that trades $50 below its 52-week highs. After almost going broke following the global financial crisis, their stock has gone bananas. It's been more than 100-bagger in the last 15 years alone. AMD is a semiconductor company focused on CPUs and GPUs. They outsource their manufacturing to TMC and focus on chip design. That's why they're in consumer hardware like the Sony PlayStation and Microsoft Xbox. Today, AMD is owned by 4 different super investors, and 3 of them were trimming in the most recent quarter. AMD's current valuations look very stretched compared to its abilities to produce cash flows. That's why a GF value comes in at $116 per share. That's $50 less than their current stock price, and it says the company may be significantly overvalued. At number 8, we have Oracle. It's a $336 billion tech database giant that's $6 below its 52-week highs. Oracle is a $284 million holding for Tepper that makes up 4.05% of his portfolio. He has an average buy price of $111 per share, and in the most recent quarter, he added 73.6% to his Oracle holding. So far, this has netted him a gain of 11%. Oracle's the first company in David Tepper's portfolio to pay out dividends. Right now, it has a 1.29% dividend yield. They grew their dividend by over 17% last year, and they've grown their dividends for each of the last 10 years. Recently, Oracle shares jumped over 5% on a potential $10 billion cloud deal with Elon Musk's company xAI. Oracle was one of the original software giants of Silicon Valley. It was one of the high-flying companies that crashed during the tech and dot-com bubble back in 2000. Throughout its history, if you weren't buying in any bubble, it's been an amazing return on investment for shareholders. Yet today, it doesn't look like the company's fundamentals are supporting their current valuations. A guru-focused value comes in at $111 per share. That's $13 below their current stock price, saying Oracle may be moderately overvalued. Oracle's in the portfolio of 12 super investors, and it's the 18th most owned super investor stock. These investors look split on the business though, with Tepper and 2 others buying in the most recent quarter and 5 selling at the same time. PDD Holdings is next on our list at number 7, and it makes up 4.37% of Tepper's portfolio, worth $307 million today. This is a company that he's been loading up on since the second quarter of 2023. Most recently in Q1 2024, he added 171% to his holding in this Chinese e-commerce giant. When we look at the timing of some of these buys and sells, Tepper has probably netted a gain of around 42%. PDD Holdings, which owns Temu and Pinduoduo, is worth $199 billion today, and it trades just $5 below its 52-week high. The company has more than doubled from its lows. There's a lot of growth being baked into PDD's valuations today. That's why a GF value comes in at $177 per share, which is $30 above its current stock price. This is the case even as it doesn't match the company's current abilities to produce cash flows. Only one other super investor owns PDD Holdings or Pinduoduo, and that's Rob Vinal. He added 46% to his holding in the first quarter of 2024, and it makes up 9% of his portfolio. Alphabet, the parent company of Google, is 6th on our list with a $368 million holding. That's 5.24% of his portfolio. Since first buying Alphabet in the fourth quarter of 2015, Tepper has bought in 11 more quarters and he's sold in 21 different quarters. He's been very active in this position. Overall, he's netted a gain of nearly 279%. He started his most recent position in Alphabet in the first quarter of 2023. From there, he added in the next 2 quarters, and more recently, in his past 2 quarters, he's been selling his shares. These recent sells have come as Alphabet has traded higher and higher, and that's why it's still a big position in his portfolio. Alphabet's a top 5 biggest company in the world, and today it has a $2.2 trillion market cap. It trades exactly at its all-time and 52-week highs. Just in 2024, Alphabet announced its first ever dividend. Right now it's paying a modest 0.45% dividend yield, and it's buying back around 3% of its shares. This is good enough to give Alphabet a 3.37% shareholder yield. That's not too bad for a tech giant trading at all-time highs. Still, Alphabet may look split on some of these valuations. They look decent compared to their earnings, but they're slightly out ahead of where they've traded in the past and their abilities to generate cash flows. Still, there's little doubt this is a very high quality business. Maybe temporarily though, it looks like Alphabet is modestly overvalued. Right now a GF value is $150 per share. That's about 19% lower than their current stock price. Across its 2 share classes, Alphabet is the most owned super investor stock. Today, 25 of them have positions in the company, and this is led by Li Lu, the Chinese Warren Buffett. Now we're into the top 5 with Nvidia. It's a $409 million holding that makes up 5.82% of his portfolio. Tepper has an average buy price of $316 per share, and based on where it was closing in the first quarter of 2024, as he sold shares, he nearly doubled his position in the company. Like its fellow Magnificent 7 company Google, Nvidia is also one of the largest tech companies in the world. Today they have a $2.32 trillion market cap, and they trade just $26 below their 52-week highs. They've more than tripled in the last year alone. That's incredible. Meanwhile, as they've climbed higher, they've continued to buy back shares, and they even pay a very tiny dividend. These together give just a very slight shareholder yield to investors. Similar to the other semiconductor stock we looked at, AMD, Nvidia's long-term stock chart looks insane. Today, there are some huge growth assumptions baked into Nvidia's stock price. This is why the company doesn't look like it's able to justify these valuations based on nearly any metric. 6 different super investors hold Nvidia. The top 2 owners were trimming in the most recent quarter, while there were 2 recent additions by Lee Ainsley and Samantha McLemore. Even if the company can maintain huge future growth, there's a lot of uncertainty. A GF value comes in with an estimate of $773 per share, which is nearly $200 down from their current stock price. Would you guess it? At number 4, we have another Magnificent 7 stock. It's Meta Platforms. Meta makes up 7.55% of Tepper's portfolio, and it's worth $530 million. Tepper's had a pretty interesting history with this one, where he was selling a good amount of shares at its very bottom, and then he bought back as the stock climbed higher. Most recently, as the company's hit its 52-week and all-time highs, Tepper's been a seller of Meta shares. He trimmed his position by 39.3% in the most recent quarter alone. Tepper probably more than doubled his money with his Meta investment. As a Magnificent Seven stock, Meta is one of the most important and most valued tech companies in the world. It today has a $1.27 trillion market cap, and it trades $50 below its 52-week highs. That's even up 4 times from its lows back in October of 2024. Like the other digital advertising giant Google, Meta also announced a dividend this year. Right now, that's a very modest yield, and they're still diluting shareholders by more than this, so they have a negative shareholder yield. Meta looks pretty good compared to where it's traded in its past and its abilities to potentially produce free cash flows. The key for the company is keeping up this growth and making sure that this is durable in the future. Right now, when we give it a more modest valuation compared to what it's had in its past, it actually doesn't look that attractive. This is why after a huge rebound from when Meta was potentially very underpriced, the company looks overpriced today with a GF value of $361 per share. Meta's the 5th most owned super investor stock. 23 of them have it in their portfolios, and this is led by Rob Vinall, Chase Coleman, and Pat Dorsey. Number 3 on our list is the biggest company in the world. It's Microsoft, making up a $588 million position. That's 8.38% of Tepper's portfolio today. He bought Microsoft shares in every quarter in 2023, and to start 2024, he reduced his position by 17.6%. We'll see where he's been reallocating this capital when we look at our number 1 position later in the video. As the biggest company in the world, today Microsoft has a $3.13 trillion market cap, and it trades just $9 below its 52-week highs. Microsoft's not always viewed this way, but it's actually a great dividend growth stock. They've grown their dividends for 19 years straight, and today pay a 0.71% dividend yield. That included over 10% dividend growth in the last year alone. From its IPO, Microsoft's the best performing stock of all time. Even still, its valuation is out ahead of their fundamentals, and it looks like the company's going to have to grow into these in order to earn decent returns for shareholders. As an individual stock, Microsoft is super investors' favorite. 32 of them own it in their portfolios, and it's no surprise that this is led by the Bill and Melinda Gates Foundation Trust. Terry Smith, who's been called the British Warren Buffett, also has a 12.5% position in the company. It could be the case, but you might just see average returns going forward. Right now, Microsoft looks like it's about 10% overvalued with a GF value of $387 per share. Number 2 on our list is our final Magnificent Seven stock. It's Amazon.com, which makes up 10.08% of Tepper's portfolio, worth $707 million. Tepper bought Amazon from the 4th quarter of 2022 all the way to the 1st quarter of 2024. Recently, he sold 3.1% of his shares in the 1st quarter of 2024. That netted him a gain of over $61 per share. Amazon's a $1.91 trillion stock that trades just $5 below its 52-week highs. It's nothing new, but Amazon's one of the best performers from its IPO. All of these Mag 7 tech giants have been phenomenal investments over their history. Today's valuations of Amazon only look reasonable when we look at it compared to its past multiples. 23 different super investors own Amazon. It's the 5th most owned super investor stock, and Tepper's one of 6 investors with a double-digit percentage holding in Amazon. Like Microsoft or Google, there could still be a lot of embedded durable growth in Amazon's business, yet it still looks like the company is trading above its intrinsic value today. A GF value is $156, implying that Amazon's about 18% overvalued. Tepper's top holding is one of the most controversial stocks in the market, but it's a favorite among value investors. At number 1, we have Alibaba. It's a $996 million holding that makes up 14.19% of his portfolio. Tepper has an average buy price of $79 per share, and he recently added 6.9 million shares, which he purchased in the 1st quarter of 2024. Alibaba is a $222 billion Chinese e-commerce and cloud computing giant. Since its lows in April of 2024, the company's up more than $20. Alibaba's owned by 10 super investors, 5 of whom are continuing to add. The only trim came from the Daily Journal Corporation, as it's reducing some of the portfolio that Charlie Munger used to manage. Alibaba has the best shareholder yield of any company on our list. They started paying a big 3.01% dividend in the 1st quarter of 2024. Coupled with their 3.58% share buybacks, they pay a 6.6% shareholder yield. That's very strong for a company in their position. With a recent run-up, Alibaba's still down 72% from its all-time highs that it hit back in 2020. The company's trading right at about its gram value, and it looks good compared to its abilities to produce cash flows. They're also trading way lower than their historical multiples. Today, a GF value looks like it's around $98.50 per share for the business. That's around $10 higher than its current stock price. If you want to learn about more opportunities in the market, watch the next video and sign up for our investing tools.